What's up, real life trading nation? I hope you're doing majestically magical. I have a back trading video that I want to provide some value to you. So here we go. Back trading the 10 EMA strategy, picking a totally random ticker. I really love this particular setup. This is a inside shave top bear candle closing nicely above the 10 EMA. So for me, that is an easy setup. Now, keep in mind, we had another bear candle right here that closed above the 10 EMA. High wave candle, and again, an inside candle. So I'm going to look to get in bullish, just like this, with a stop loss right here. That's the current setup on this particular trade. I love it. I'm all about it. I'm amped. This would be set up in my broker, and my ultimate target would be up here at about 90. Keep in mind, there is earnings right around the corner. So I'm thinking to myself, all right, if I'm playing this, I need to be out before earnings and move on and reanalyze from there. Okay, cool. Next candle, you have an inside bearish candle, right? Inside meaning the pressure is building. The highs of these two candles are almost identical. The opens are almost identical. The lows are almost identical. It's a really nice compressionary event. Volume is declining. This thing is getting ready to explode. Absolutely 100% setting this trade up. Now, keeping in mind, using this strategy, what I love to do is blend all the other moving averages together. I love using the 10. It gives me my entry, 10 for the win. I now look at other moving averages to find out what do they look like? Where are they at? What is the resistance? So here's all the moving averages, 10, 20, 50. So again, I can see some compression. My entry is above the 50. That's nice. And then here's your long terms, the 100 and the 200. And then, oh boy, 100 is kind of right in front of our face. Is that going to stop me from taking this trade? Not really. But knowing that earnings is literally days away, what I'll probably do is still take this trade and just use that as an actual target. That will be a spot where I will sell and lock in a really quick gain. Next candle, gaps down, nice volume, lower shadow. So now I go, all right, did we invalidate this trade? Pull up the 10 EMA again, and we'll notice, nope, we're still closing above it. I like that a lot. It looks really intriguing. And this is still kind of like a hammer indecision high wave candle with a lot of bear volume, but we have still closed below the 10, giving us an opportunity to potentially get in even lower. So entry can be dropped a little bit. Stop loss can be dropped a little bit. And now we still have a setup. It still needs to break above. We still have a close above the 10. I really like this wick because this wick looks like it trapped some people over here. And those people that got trapped are going to be nice and angry and mad. And they're going to get back in with larger size. And here we go. Nice gap up the previous day. This has also been just a phenomenal day trade because you can see how it opened, right? Trapping all the bears who shorted at the open and close. Really beautiful day trade. Would have loved to have day trade that guy. And what I'll do in this situation when I'm back trading is truly, now that I see that was back in October, right? Not in this particular video, but I'm like, all right, if I'm back trading this, I'll shut it down and finish my swing trade on a daily trade and then go in on a 5-minute and back trade or go on a 3-minute back trade. Okay, so here's the 100 simple moving average, right? I mentioned I'm gonna be using that as a target. So here's the target simply because earnings is right around the corner. Next candle, we don't quite get there, but I really like the upper shadow and the lower shadow. Still digging that. Turning on all the moving averages again. And what I'm seeing is we're making higher highs, we're making higher lows. We came down to the 10 to 20. The 10 to 20 are right on top of each other. In fact, they're the exact same price. 83.37, 83.37, very good support. So I'll know in my mind, if we take out that support, this trade's probably not gonna work. But if we hold that, we should be okay. Next day, bing, bong, boom. We hit the target. Nicely done. Also, keep in mind, tons of volume are coming into this. So that's really exciting to me. And the target has worked. The trade has hit. And we're out of the trade for a quick little win. Nice little R and some change. Now, with earnings coming up, we're going to think to ourselves, okay, cool, let's just leave it alone. Let's see what happens. Nice bullish candle. We made another bull candle. That's 3 bull candles in a row. 4 bull candles in a row. So now you're probably getting FOMO, but this is what's really interesting about this. We can see that the trend is now establishing itself. We're making higher lows. We have bounced. And if I'm doing a wave count, which we always should be doing wave counts, probably 1, 2, 3, right? This is some type of wave 3. I'm looking at that because of all the volume and the strong bullish candles. So now what I'm saying to myself is, okay, with earnings coming up right around the corner, could I play a trade that is into earnings? And what's really interesting is right before, the day before earnings, we have a bear candle, right? After 4 bull candles in a row, a bear candle with a new high. So what does that mean? Well, that means that you're going to have some bears that are shorting. So same people who shorted there, they are shorting here. People who are taking their profits from all that bullishness, they're selling, creating that bear candle. So my thought is one of two things. If I'm trading Tradeweb Markets Incorporated and I want to go, all right, where should I play this? How should I set up an entry over earnings? I can have two choices. Choice number one, I could buy some call options out of the money that if it gaps above here, it's going to just absolutely crush. So probably buy some December calls, right? If it opens above 90, just hold on because it's going to totally rock and roll. And if it gaps down, this looks like a fadeable event to me. Because again, 1, 2, 3, probably a wave 4, and then into a wave 5. That seems really, really likely. Plus you got the 100 simple moving average right here. Plus you got some support, I could argue, from this candle, from this lower shadow, from this guy. So you have some support in this general area, looking at the actual chart. And again, having that wave count, having the 100, and of course, looking at all the moving averages, we're really bullish. They look very, very nice. What would be the price where I would be concerned? Well, if we opened below here, which is that pivot that trapped everybody on October 18th, that's the one where I would say, yeah, we're probably going to drop like a stone in water. So therefore, what I would do in this situation is one of two things. I would probably set up another entry, right? The entry right above the high of this candle, that's the bear candle, that would have been a spot where I would have liked to have gotten in anyway, above that on a breakout, but I didn't because of earnings or whatever else, other fun excuse I had, right? That could have been an opportunity. Or I plan a day trade that if we gap down, I'm looking to fade it long because of the moving averages. And again, if we gap up, I'll look to play it that way. So you could have a limit buy to get in at 85 and have a stop loss down here. Now, are you going to do that over earnings? You could, right? You could. And you could let this only trigger at market open. Or maybe you don't have to use a good till cancel plus extended hours order. You could only just have a when the market's ready, right? Good till cancel. So if the market opens below 85.08, then you get filled at open, and you can kind of look at and open your charts and see what it's doing and decide if you want to cancel it or not. Like if it's opening down here, right, you'll just cancel the order so you don't buy and get stopped out immediately, right? So next day opens, bing, bong, boom. Beautiful. So you would have gotten filled around here, around open, that's amazing fade. That's just gorgeous sentiment. This is definitely a wave 4, and I love it. So this is the wave 4 bottom. Love this candle. Probably expecting either some higher highs from here, potentially a retest and a continuation higher. But either way, I think all roads lead to higher from here because of that general wave rotation. But we will definitely know, all right, we really shouldn't take out this candle because if we do, bulls are going to cry. So that's your new stop loss right there. Bang. And then continuation higher. Looks nice. I dig that. Really, really pretty looking candle. I dig that. And then that $90 out of the money call that I bought before earnings, right, on this day, that would just gone in the money. So that would have been a very, very profitable call option. And again, we have 4 bull candles in a row, new all-time high, 4 bull candles in a row right here, 4 bull candles in a row here, new all-time high, new S-curve. This is where I would sell the position. Getting out here, locking in my profit, nice little win. Anyway, love doing this analysis. Keeping in mind that the 10 EMA strategy is something I'm going to be using so much in 2022. And we're going to have a free week at Real Life Trading where you can see me do this type of analysis with you, your stocks, your setups, and your questions for an entire week. Stay tuned for that. But ladies and gentlemen, keep in mind, my mission is never going to change. I'm here to enrich lives. I want to pour into you. I want to pour into your bank accounts, into your portfolios. I am here to help you become the best, most profitable version of yourself. Let's go! You rock. I'll see you later. Bye.